I like that. I think it actually worked.
Nice.
Michael, quit messing with your computer. You're going to ruin it. You're going to ruin everything. Hopefully we can get Andrew in here this week to fix our Wi-Fi.
Yeah, I sent him a text.
Yeah, broken hand and all.
Yeah, he'll be all right.
All right. Hey, everybody. Oh, that's it. I always got to put this stupid thing up there. Is it the...
Yeah, the disclaimer that we are not professionals. We're just some dudes who like to talk about charts and markets. And
everybody's going to want to watch this crap. It's horrible. Horrible. Anyways, we're just talking about stuff, having fun. Don't take anything that we say as financial advice. Okay? Just do your own thing. Be your own dude.
We're just here having a good time.
Or do that.
Do your own research. Don't take what anyone ever says as face value. Always do your own research.
Yeah, that's always good advice.
Exactly.
100%.
Cool. Well, moving on. See how this works. We're on Apple Podcasts now, so that's going to be interesting. So as we do this, we do a lot of the market podcast. We do a lot of charts and stuff. So you really kind of want to watch this one, but we'll try to be as explanatory as possible as we're talking about, what we're looking at. So we always like to kind of start off with an overview of what the market's doing and kind of where we're at. So,
and we start with crypto because Fortune crypto.
Yeah,
makes sense.
we might do some legacy just to make Michael happy.
Thank you.
Although he's talking me into doing some options again, so we'll see.
Some fun little low risk stuff.
We'll see. I mean, this is. I'm gonna kind of hide this for a second, and I'll bring it back. I'll just leave it there. Whatever. Everybody will see it. We talked about this on the last Friday. Michael and I did. I kind of showed Blake this morning, kind of the thesis of it, but they're patterns. And I don't usually trade on patterns. I like to use them as just ideas of what could possibly happen. And a lot of times in markets, you'll see things rhyme. There's rhythms within the markets, the ups and the downs. They tend to follow similar patterns. And so I'll talk about that here in a minute, but that's what that is going to entail is, that's what we're looking for. We're looking for different patterns to give us a little edge on what we can do to, make sure that we're using our funds wisely.
Right.
And for me, we're still in a bull area itself. And I think we continue in that path for the next couple months. I think we're talking this morning, and the next FOMC meeting is in end of the month?
End of March. It's March 21st to the 22nd is the FOMC meeting, and I think the 22nd is when they'll do the next rate hike.
Are we gonna do another bet on the rate hike? What do you got, Michael?
I'm gonna wait until we get closer to decide.
You owe me
$20.
Well, it was supposed to be 20,000, but apparently it's dropped it to 20,000.
I never bet because I hate gambling. I like winning, not gambling. And I was pretty sure the Eagles were going to cover the spread, so I bet Nate $20.
Hey,
and,
I didn't watch a single NFL game, and I still won the bet this year. So
that's kind of how things roll for you.
How good I am. Now, but I think we should put a little something on what we think the next raise is going to be, or is it going to be a raise? We should put it ahead of time before all the pundits come out and start saying, oh yeah, it's going to be 25, it's going to be 50, it's going to be 0, whatever.
Right.
I'm going to put it out there. I don't think it's going to be one. I think it's going to be 0.
Really?
I think it's going to be 0.
Well,
putting it out right now, 0.
Well, yeah. So I guess I'm more bear because I'm thinking 25. But,
all right.
But I don't know that I'm ready to bet on that.
You want a double or nothing?
No.
Take your 20.
I don't like gambling.
Liar. You do too.
I like it when I'm very likely to win.
Well, maybe after this podcast, when we talk a little bit about where we're at with inflation and that kind of stuff, you might have a little different outlook. So,
yeah.
Again, we're gonna go Truflation.
I like this.
If you haven't checked it out, just go mess around with it, man. It's very good info, giving you an idea of where prices on all these different categories: goods, housing, transport, utilities, health, all the above, alcohol, tobacco, clothing and footwear, communications, education, recreation and culture, tons of stuff. So housing is an interesting one.
Yeah.
The inflation is dipping quite
Wow.
hard too. So yeah, I mean, we'll start down here. The weekly, it's just got a nice decline in the monthly, same as well. So overall, this pattern of decreased, year-over-year rate for the trueflation. I can't really call it inflation, but the trueflation is moving in a direction that it should be, right?
Yep.
With the aggressive rate hikes that they did and the ability for them to, maybe create a soft landing.
I wonder, I was reading some stuff today about how like more people are starting to like put their house on the market, like just in the last like week or two. Like, I need to dig into that more, but it sounds like we might see more sales actually go through, and we might actually see housing prices perhaps come down a bit, because I think they're kind of artificially inflated right now.
I got a whole thing on the housing. And by the way, I know you want to look at me when we talk.
Yeah.
But you keep going away from the microphone. So
okay.
we might have to switch spots so we can be across from each other so we can look at each other.
That's a good point.
In the office.
We'll do it next time.
Yeah. We got to fix this whole office anyway. This thing's just a nightmare.
It's just small.
Anyways, so let's start with housing. Find me a good housing indicator, Michael. I'll pull it up on the charts while I start chatting. So we are going to talk about Boyle, by the way, but well, I guess we were supposed to talk about crypto first, but I mean, crypto's had this dip after a run up, which again, anytime you get a run up, you're going to want to roll over and, create a little bit more liquidity. It's not up only. Everything moves in waves, ups and downs all the time. So having a little bit of a downtrend is not bad. We're still in a bullish scenario here. If you're using the cloud, we're, above the cloud on the daily. Cloud's green. Everything's looking good. If you don't use the cloud, maybe use moving averages. There are some interesting moving averages in here. I'm going to pull those up because we have like the 50-day, 200-day, and I'll leave the 10 on there as well. So in the daily, you have what's called a golden cross, or what's the bearish one called? Death cross.
Yeah.
So we've already had the death cross. It was back here. That was a while ago. Up here in January, so a year ago. So we've been after the death cross. We are now looking to potentially bring in the golden cross. So the 50 cross and the 200 could be any time here, the next week, depending on what kind of information we get here in the coming weeks, But so right now we're sitting just above the 200, which is nice. You can see that support that's there. It's also riding on a high liquidity zone and some other support zones with other indicators right at the 21.3 right there. So it's above that mark there. The 50, which is this gold colored, the orange colored one, that moves faster than the 200. So essentially the idea is when the 50 crosses the 200, you're already moving in that direction of up, right? At some point in time, those moving averages will come together. And when that cross happens, or just before it happens, a lot of times you'll see the prices move they'll move away from what everybody thinks. So the golden cross comes, everybody's like, it's bullish, yay. Well, really, a lot of times you'll see either just beforehand or just after is it will dip and come back to, touch those indicators. And as we can see, we were kind of doing that now. If we were to back up in time when we saw the last golden cross coming off of a bull, laggy, dude. So laggy. Can't even do this. Anyway, so look for yourself because I can't show you apparently. A lot of times you'll see those. The move happens, for the bullish side, and then you'll see a little bit of bearish action, and then some consolidation and back up. So it's kind of what we're seeing here. Same thing. Not too worried. We're still sitting really well, sitting above the 50, sitting above the 200, and we're on the daily right now. So realistically, when you're trading dailies, you're looking at weeks and months when you're looking at trades, right? You're looking at this time frame that's going to be in the weeks and months time frame. If I were to switch to the weekly, keeping the same indicators on there, this is in the weekly time frame, you're trading on months to years. Okay. As you can see, we are above the 10 EMA, which is a nice indicator to kind of go there. This is an interesting, the 5,200, we saw this last week when we were looking at it too. This is the first time ever Bitcoin on the weekly has had a death cross. So in the same way that you're looking at the golden cross, and you have the move that goes to it and vice versa, and then it kind of will, correct the other way. Same thing with the death cross, right? So the death cross is a lagging. These are lagging indicators, right? They're not moving ahead of time. So we've already had this massive move down and draw out for well over a year. And so what we're seeing here is we're seeing a move up on the weekly time frame to, back to the medium term. But with that all being said, this looks nice for, again, a continued move up. I'm still looking at that 30K range as the move that we're going to have here over the next couple months. That's kind of where I see that we're going to hit. That's still not out of the realm. I still think we're going that route. So yeah, that's the crypto universe. We've got other, everything else is following Bitcoin to get hit hard. Like Magic, we've been looking at, if you're looking for entry points, well, there's some decent ones coming up. Right. Good time to dollar cost average in if you like that. I have not sold that. Doge, it's the trade there it's been, pushed out, but I think my thesis on your meme coins, Doge, Sheeb, that kind of stuff is they're going to be the ones that really go crazy when you have moves up. So I think we still get to move up with the majors like Bitcoin, Ethereum, and some of the others, Sol. And then you're going to see it go into the medium terms, and then you're going to see the meme coins really pump. And that's going to be kind of the end of this little cycle here, is my guess here. So, and when I say a move up, it's not this gradual like we saw from December until just recently in February, where we went on Doge from, what is that, 7 cents?
Yeah.
7 cents to, 9.5, right? No, I think it's going to be more like when you looked at October,
November,
where it went from 6 cents, and in a matter of a few days, went up to 14 cents, 15 cents.
Yeah,
that's the kind of move you're going to see, and that's the type of move you're going to say, okay, time to decrease my exposure to whatever I'm sitting in. Take some money off the table, let things kind of cool off, and then look for the next entries. You don't always have to be in a trade. So that's kind of where I think we're at. What's that?
Always another trade.
That's right.
Right.
See, look, I'm rubbing off on you. There's always another trade.
Nice.
There's always another trade.
And I think CPI is tomorrow, right? So
yeah,
that
tomorrow.
could be a trigger. if the numbers are good, like it looks like they might be.
Well, we've been following the Truflation lately, as in what the CPI numbers are looking like. So, when was last January? Was it in 6 or just 5? I think it was 6. What do I want to say? Yeah, we're just in the 6, and we're sitting down in the low 5s. So.
Right, and the trend is nice. The trend still is nice.
The trend is your friend.
Yes.
So, anyways, back to crypto. That's crypto in a nutshell for me. Kind of where we're at. I can go over to a bunch of charts, but really, until we see some things turn around in overall markets, I don't think there's much to really kind of jump into.
Yeah.
If you're in the Discord or you want to see certain charts, just ask me, and I can post them up there. Different entries for different ones. Looks rare, still looks really strong too. I like it, but but really, what's driving it is I think we've got a lot of stuff that's happening outside of just markets, right? It's not just technical stuff. I have a lot of things, and tomorrow we've got CPI. You want to do a bet on CPI? Higher or lower than what was the last one? Tell me what the last one was.
Oh, I don't remember.
Come on, man.
I did. It was in the 6s.
So last CPI, I think, was 6. Wasn't it like 6.25?
I think it was 6.5. Wasn't it? No, I'll find it.
We'll find it. So, regardless, I think numbers are going to look decent, less than they were last time, and I think we're seeing the market corrected just for that sake of the fact that these CPI numbers are going to look good, and I think we're going to see some bullish movement off of that for everything. So, let me take this Ichimoku here. Qs are, again, we're bullish and really bullish scenario here. Little correction off of here. This is on the daily. I want to look at it on the weekly because when you look overall, we've had a nice move from the bottom, almost a, you know what you call that really pattern wise, but
it's almost a W bottom, kind of.
Tried to be, but it's not. This side's a little, and we had too high up here. It just wasn't. It wasn't there, but
I was talking about the most recent there. That's like a kind of a truncated W almost, with that second part a little higher.
It'd be right here if you're talking about a W bottom off of this one.
Mm-hmm.
Not out of the realm. We were running some Tesla calls, which I sold mine last week.
Yeah, you did pretty darn well on that.
Yeah, it was good. I mean, I was debating. I was always like, it's always the trouble of taking profits. I think I sold around 200, where the price was when I sold the calls. It was 100 some odd % profit. It was a good run. I will get back into Tesla because I think it has some more run to go. But I rolled all my stuff into Boyle. Boyle, to me, it just screamed, this is the weekly. And Boyle is basically, it's a 2x on natural gas. So meaning it's leveraged 2 times like natural gas price, essentially, is kind of the way it runs. So if natural gas goes up, it's going to go up 2 times the amount in percent.
And also down.
Yes.
It is riskier.
I thought markets were up only. We don't do down. So massive volume. I mean, over the last few weeks, just massive volume, which I love to see, whether it's capitulation and we're getting close to the bottom, regardless. I did a year long, I think my call ends in January of 2024. And my strike price was 17, I think.
15. I thought you did 15. No, you did 15.
I did 15. You're right.
Which is still, that is a high risk, but it will work out very well if we are correct in it going up in the near term.
Yeah, and can it go down? Of course it can. Of course it can. We're all time frame of where we're currently at. Well, this is the lowest this actual indicator's ever been. So yes, it can still go lower. And as we've seen since 2012, this entire thing's been down.
Yeah.
And look at this volume. That's insane.
Yeah.
But if we go to NG1, which is your
futures, right, for natural gas.
Yeah, it's futures for natural gas. This kind of gives you an indicator of like where prices have been over a time frame. Again, this is monthly. So we're, as you can see, this is a zone that it's normally in. Massive drop into this area.
But that's on the monthly. Like zoom in a little bit on that. Like that's a stale red light. Like if I've ever seen one, just
again. I think you said that last time. What's a stale red light?
It's I think it's more than 3 candles in the same direction. So stale red if it's going red, stale green if it's going the other way. And it's just the idea.
Is
and
it a reversal pattern?
No, it's just a very crude idea that markets are cyclical and eventually they turn the other way. And so it's like if you have a bunch of
it is a reversal pattern. Meaning,
but it's not a full. Yeah, I guess it's not a.
Come on,
I wouldn't hang your hat on it,
dude. Pump up my bags.
I wouldn't hang your hat on it. It's just one thing to look at. That's been a lot of downward pressure, and at some point, it's got to turn the other way.
So we're looking at we got 3. And we're on the monthly. There's 3 really red candles that have played out, which obviously this month is not over.
No,
if we go on the weekly, I almost guarantee we've got more than
the
leading up to it. There was 1, 2, 3, 4, 5, 6, 7 red candles in a row, 8 red candles in a row. So 2 months straight of nastiness. I feel like there's probably a little bit of some reprieve due. So,
yes.
All this stuff that I'm doing right here, they're not long-term holds for me. So
yeah. Now I played it differently. I just bought stock and then I sold calls against it at like a really high point. So I bought, I think at something, I think 620 or something, and then I sold a $9 call that expires in like a few weeks. So that'll have good time decay and just get me a little premium. And it's like if it shoots through there, I lock in my upside at 46% in a month, and I'm okay with that. If it shoots through, you'll make a whole lot more than that percent return.
Yay. Well, let me ask you this. So you find the CPI? What was the CPI?
Yeah, so CPI, it was 6.5% in December, and then according to this one,
wait, December. What about January?
January is what gets reported tomorrow because the month has to complete.
It's a month behind.
So according to this one website, so I don't know if this is consensus or not. This one website, they're saying 6.2 is what's expected, is what's most likely for January. So
wait, what was December?
So December was 6.5,
and it got reported in January.
Yes.
Okay, so
because the month has to close,
they,
and then you have to crunch the data.
Okay.
To
this, they're so okay. So they're going to report. Okay, so they're reporting Truflation. So we're a month behind. So 6.2 for the month of December. No, they're going to
for the month of January is what this is one website is guessing.
So 6. Are they saying the full month of January, or is
yes.
it a spot in time, like the average of January?
I think it's all of January, and then they crunch all the data.
This is the dumbest. Why are we hanging our hat on a CPI number? This is the dumbest thing I've ever heard in my life.
This is just the way
Who are we? What is going on? This is the dumbest. Probably not the dumbest, but I'm over exaggerating. Give me a freaking break.
Yeah,
people are literally like, we're trading off of the fact that we want to see a month ago for the average of the entire month what things were. When we have data literally right in front of us, oh, guess what we're at? Well, we're about 5.32. Oh, no, we're at 5.26. Great. Like, we could see it on a daily damn basis. Why? Or the March, is there another CPI? The beginning, I'm assuming the beginning of March.
I would assume.
Right, because they're going to get February's, right? Okay. Mm-hmm. So we'll get February's. And then they're going to go and look at what that trend was from the last time, which was last week was the FOMC meeting. So last week? Yeah. It was February 1st when they put it through. So it's almost 2 months later, they're going to do some random average of this crappy CPI number and say, oh, here we go. I'm going to raise rates. Actually, I don't think they're going to raise rates, but they're going to say, hey, we're doing really good. Rates are going to stay the same, and go ahead and be merry.
Yeah.
Or things suck. Let's raise them a half a point.
I don't think
50 basis points, whatever they're gonna do. No, I don't think so either. But it's like the fact that you can see trading happen off of this stuff is really, it's disappointing and gross. It's like, can't we trade on stuff that's actual, like, real?
No, that's not how the market's traded.
Only if.
Only if. Well, I want to talk. Okay, I've been talking a lot. You guys, I'm going to go into a whole housing diatribe here in a minute. So if you guys have something to say it now. Forever hold your peace, because it's going to get crazy. Just kidding.
Just go crazy, man. Just go for it. We'll jump in.
Well, okay. So I, a while ago, have been very much like a lot of people waiting for like another shoe to fall. And the interest rate side of things has been really pushing me to think that, oh, by the way, did you find housing indicators yet?
Yeah, like, so existing home sales is one. And so I in the Discord, I put the ycharts.com link.
I don't have Discord
though. Okay. Well, ycharts.com could show you that. Just look up existing home sales, and you'll find any old website that'll show that. Last is reported from December 2022 being down 1.47%.
I got it. Existing home sales. It's weird. Put me on a line chart.
Yeah.
I'm on weekly. That's interesting. Let's try this again.
This is new for us, so we're just kind of figuring this out. This is kind of fun.
Hold on, we'll get into it. I go quiet. You guys should talk.
Okay.
I'm trying to look this up because Michael couldn't look it up for me, so I have to find it.
Sorry.
Okay, hold on.
We could look up fastly. You want to talk? The thing is, we got to pull up the chart, I guess. What's up?
Go, Blake.
I was going to say, I mean, one of the other things I saw as well, looking at, you know, housing as a whole, is kind of looking at construction costs in the housing industry.
Yes,
Because I mean,
absolutely.
that's
Yep.
obviously going to be a massive precursor. You know, one of the things I was seeing is, granted, they haven't been able to report on first quarter this year yet, but looking back at last year, you know, like first quarter 2022 was about a 2% increase in construction costs. Second quarter was about 2.2%. Third quarter was about 2.18%, and fourth quarter was about 1.6%. So we still are seeing a gradual climb in construction costs that I would assume is just tied to overall inflation.
Right.
But it is slowing, at least, which I think is a big
Right.
indicator that things are starting to swing back on that pendulum back more to the median ground.
Which, so going into my little diatribe I was going to go into is I was one to think that we were going to see some ridiculous amount of
Sell off.
Yeah, big
Prices going
sell off,
down.
big sell off in the homes,
Yeah.
right? And the thesis was, you know, we're going to raise interest rates, which we have been, and you know, people aren't going to be able to afford their houses to buy new ones. They're not going to want to sell their house because they've locked in a low interest rate. So what's the point? They basically are kind of golden handcuffed into that house, you know, unless they have extenuating circumstances like they have to move or they got a really good job and so they are buying a new house, you know, somewhere else, whatever. But overall, seeing a huge hit on the overall market in home sales. So as we've seen, well, what I did is I dug into more of the charts and looking at interest rates and looking at home sales, or not home sales, looking at interest rates and looking at what it's done to markets and what the housing market's done.
And what you found was a little different than I think we kind of expected.
100%. So when the only times that I've seen a massive drop in, like, that was just like scary drop in the housing market that affected the overall market was something like 2008, where you had extenuating circumstances of just a bunch of just over leveraged individuals within, you know, crappy home loans that were coming to, you know, fruition, and banks were getting hammered, right? So this affected, it was a ripple effect over all indices. Where what we're sitting at now is it's more of a just an interest rate to quell inflation, and not necessarily an extenuating circumstances into all of the actual home and building prices because of, you know, over leveraging and, you know, bad business practices, right? This is just a cycle of interest rates. And so with the interest rates doing what they're doing, and I think they're still going to raise throughout the year and probably a little bit next year too. But I think we've seen the worst hit because we pumped up those interest rates really fast. And I think what we're going to see is the shakeout come through. We're getting out of, you know, winter here in the next couple of months. We're going to start to see homes come back up for sale. Now, I don't think we're going to see prices go up, but I think we see some stabilization and a little bit of decreasing in prices. And that's all going to be region specific. But overall, like, you know, depending on where you're at and how much they went up in the first place. But overall, I think we see this a little bit of stabilization and a potential a little bit of decrease depending on the area that's at. I'm hoping a little bit in my area because I'm going to buy something new.
Yep.
But I have to go away from what I thought was going to be an epic fall in home prices in the overall housing market, and think that it's going to be a little more stable moving forward from here on out. I think we've seen the worst. Not that it can't go down a little bit more, but it's not. I don't think it's going to be this, like a lot of people were calling. I don't think we're going to see 25, 30, 40, 50% more in housing pricing decrease in a short time frame. So, but I do think that this is going to have a ripple effect in time. I think this is going to go on for a long time frame because I don't see these interest rates coming down this year. I don't see interest rates coming down next year. I don't think, you know, maybe you might see some, you know, pullback on the interest rate side late next year, which might affect the housing market a little bit, but I don't think we see that anytime soon. So
I'm going to disagree a little bit on that. Like I don't think we've seen it yet. Like
yes. You want to bet?
You're a madman, Nate.
I love it.
Hey, I won $20. I'm on a roll, bro.
He is on a roll. He's on a
Love it.
hot streak. And I'm on the opposite of that. No, this is not based on like technical analysis. This is just kind of my thoughts, just seeing how markets adjust over time. And it just seems like there's still way too much money in the system. Like I was reading something recently that like, I guess 35% of the money that was given, to all Americans during COVID has been, spent. And the projections are by the end of the year, then the other 65% will be spent, And so when you're still seeing things like revenge spending where people are booking these extravagant, insane vacations and just dumping tens of thousands of dollars, on these like stupidly expensive things, because they deserve it. They want it. They had to live through COVID. Like people are burning through cash. And I think people who are sitting in their homes, like you are very disincentivized to sell right now because, when you sell, if you take a new mortgage on, you're paying twice as much now. And
interest, at least,
in interest. And so of course, nobody really wants to sell. Of course you see home sales down, but eventually that's going to catch up eventually, whether it's, a job change or, relationship change or whatever it is, you're going to see more houses start to sell. And then that's what you're going to see the real housing prices kick in. And maybe you're right. Maybe the prices will just stabilize. But I think once you start that ripple effect of people selling and prices going down, and then you see your neighbor's house sold for, less than you thought it should 6 months ago, then all of a sudden you're going to think, can I hold on for another year or two, or is it going to be lower and should I just get out? And so I don't think we've seen it yet.
So you think we're going to get another big hit in the market for?
I think in housing, and in the prices. I think we're looking
Okay.
at sales right now, and I think you're not going to see the prices drop until you actually see sales go up, and then you're going to see what your market actually is. Like then you're.
Well, I think there's a direct relation between sales and prices.
Yes, but I don't know. I just feel like people are just sitting on their houses because I
agree.
They don't want to sell and they don't have to.
So where's that dip going to come from?
When they have to sell.
So why do they have to sell? Do you think because they're revenge spending?
Because they ran out of free money. They haven't run out of the free money yet. So everybody still thinks they're richer than they are, and they don't know yet.
Okay. So there's a lot of free money out there, and when that goes, so does the housing prices. But what you're not taking into consideration is the fact that you're going to get a UBI before the end of the year, so everybody doesn't run out of free money.
That very well could happen. Yeah. He means universal basic income, I assume, when he says UBI. Oh, yeah. And that could definitely happen, and that'll keep it going for a bit.
No, and look, I win either way.
Yeah,
because if the prices go down, I get to buy a place that I've been looking to buy for a while. And if prices go up, I think all markets are going up, and so the housing, or even if it stays steady, and slowly declines, because
that's the best case scenario.
Well, that's what I think is going to happen. I think we're going to stay steady in pricing and slowly decline in some areas.
Yep.
And that's what I think is going to happen. I think that's good for markets overall, because I think we've seen the ripple effect of the big stuff come out. So
yeah.
You've been all over this revenge spending thing. Have you been doing that up on your house? Is that why it's coming into play?
No, I am the opposite. I save every penny, and I'm super frugal, and that's why I'm where I am.
Love it.
No, I mean, I think another thing to look at too is cars. And I mean, I saw this statistic. I think 15% of drivers, or almost 15% of drivers who financed a new vehicle at the end of last year, are paying more than $1,000 a month for their car, which is
insane,
which is an absolute record. I mean, it blows everything out of proportion. I mean, the average car note at the end of 2022 was $717 for new cars and $563 for used, compared to 5 years ago. That was $525 and $389 respectively. So the car prices are so drastically high, and people are paying so much more than they have. And I think it's tying back, Michael, to what you said, is this free money that they have that they don't really have is going to come back to bite them so hard.
Yes.
And a big part of that is interest rates. I mean, the interest rates are comparatively to even a year ago are, 2 to 3% higher between used and new cars. So, I mean, I don't know.
So this is a consumer loans. This is right now. I'm looking at consumer loans. It's on the monthly. I'm going to go down to the daily so you can see a little more. But this is the consumer loans for cars, for automobiles, and you can see this to 2016, 15. I mean, it's just been up only. But I mean, realistically, when you look at what we had here, is this kind of flattening? Whatever the hell happened here,
Yeah.
but came right back down to it. So it's a little bit of a kind of curve over. So I mean, that's good news in the fact that these auto loans are starting to cool down a little bit. That has obviously a lot to do with interest rates, because this is when we started heavily increasing interest rates. So I'm sure less people are getting those auto loans. But this is showing the amount of loans out there, not what these people have to pay, which I think is a big deal. And it comes back to what Michael said is, when you look at household income and what you're looking to buy, people buy the things they don't need first, right? They're like, oh, I got a credit card, I'm going to go buy jeans. Well, you can walk around with just underwear on, you're fine. Like, people want to buy new cars, instead of buying a used car. And we see that keeping up with the Joneses affecting them, and these interest rates are going to have a ripple effect across that. I totally see that. This is definitely something to keep an eye on. I'm going to look for some other ones. Maybe next week we'll do some indicators. We'll kind of do a deep dive into some different indicators that show kind of consumer aspects of stuff. I think that'd be a good one to look at.
Yeah, that's a good idea. That'd be fun.
Cool. What else you guys got? We're getting to the time. I don't want to go much.
You want to look at a few charts, like maybe a Fastly chart? That's an interesting chart to look at right now. FSLY.
So we're looking at Fastly had a big bump today. Huge.
Bank of America.
When's earnings coming in?
It's Wednesday after the close. So we might want to adjust our position Wednesday afternoon, depending on market conditions. We just took a baby position just for fun today.
Well, he's trying to teach me what do we do? Sold to open put.
Yes, we sold a cash secured put. If you read an options book, they say selling puts is incredibly dangerous, and from a strict options perspective, it really can be, because if you sell a put but don't actually want the stock, and then it goes against you and the price crashes, then you can often pay magnitudes of order more than you were paid in premium to buy that back to exit that contract. And so you can get really hurt. Now, what I do is I sell cash secured puts. And so I only sell a put on a stock that I really like. And so for this example, we sold the $11 put that expires on Friday for 55 cents. And so if it is above $11 on Friday at close, that contract will expire worthless, and the 55 cents per share that we were paid will be permanently ours, and the contract is null and void. Now, if it drops under $11, it could drop way below that. We would be assigned the stock at the $11 price, or we could choose to pay the difference between $11 and whatever the stock's at to close the contract and not be obligated. And so this is just kind of a lazy way to trade options that I do just to collect premium. But
most people that I understand that do this are like, hey, I really like this stock. I like Tesla, right? Or I like Apple.
Right.
So I don't mind owning this. So let me capture some premium, because if I sell to open this, I'm going to get paid to open that contract.
Yes.
And I get that money right away in my account. It goes directly into my account, so I could turn around and spend it. And then if it falls, and I'm saying I like it, and if it falls below this, I'm fine with that, because I want to own the stock anyway. So that's what a lot of people do and look at it. But you're looking at it as a trade opportunity of saying, I think there's some more bullish movement.
Yes.
So I am going to sell it at this low premium, in thinking the idea that it's going to continually move up over the next day or two. And then you want to buy it back at a cheap price.
Yes.
So then you can then turn around and do what with that?
Then move on to the next trade. And so for example, like I think with that volume and with that candle, I think there's, a very good chance that, and going into earnings Wednesday evening, I think more likely than not, this will be up, on Wednesday. On Wednesday, most likely where it is. Which is Signon. If it we can those contract paid 55 cents a share, might be able to buy them back for 30 cents, and so and I'm very happy with that trade. That's a decent return.
Well, I'm really interested in this because of sitting in cash is never really something I like to do, and so this gives me options, and I'm just learning, so I'm doing little baby trades here, so I'm not going full degen. So do little baby trades and learning the idea of what this is, because I'm a dork, right? I'm just like
no, you're not.
I'm a big dummy. I'm very simple. Like, I'm like, is number going to go up? Okay, I buy it. Is number going to go down? Okay, I sell it. Or I might use a little bit of leverage depending on if I'm on a crypto exchange or not. So
right,
this adds a little more complexity to it, but I think from just a little bit of talking with Michael this morning, I kind of like this side of things for just having cash on the side and being able to kind of use that. So
it's just collecting a little extra premium. And the way I do it, I don't know, this is just kind of how I do it on my own head. I don't know if this is actually correct from an options strategy book or whatever, but in my head, I'm like, we basically set aside $11 per share to pick up the stock, and I'm totally fine doing that and then selling calls against it. We can talk about that at another date, what that means. But I'm setting aside $11 per share, and I'm paid 55 cents per share to hold this contract for a few days, and
for a short time frame, which is
for
great.
a very short time frame. And so I just take 55 cents divided by 11. That's around 5%. And so in my mind, I can collect 5% on that. $1,100 per contract for 100 shares. I can collect 5% of $1,100 this week while I'm just sitting on that cash, and realize I'm going to buy it at 11 when it's trading at 12.48.
Right. So it has to go down quite a bit.
It has to come down quite a bit in a short time. And so this is what I mean when I say, I often have like hedged positions, or, I don't like just straight up gambling. I like having a lot of ways to win. And to me, this seems like and has been in practice, a way to collect premium on a pretty consistent basis.
Sweet.
Yeah.
Well, we'll be talking about that on Monday, because we will do something here in the next few days with these contracts.
Yeah.
And we'll post it on the Discord as well. I'll just so people can follow along if they're again their own trades, what we're doing just because you think we're not.
No.
Okay.
No, this is just how we think about that.
Trying some stuff out, and this is all about education and kind of learning new things. So, but I think we're good.
I think that's a good place to stop.
All right, guys.
Yeah.
It was fun time, fun talk. You guys enjoy the rest of the week, and see what happens.
Yeah. Have a great week.
Take care. Bye.